and I wanted to thank our sponsors and our members. First Lien Capital, Sunstone Property Trust, Mercandine Automated Properties, Allagash Partners, Apex One Investment Partners, Boomerang Capital, S&P Global Market Intelligence, Nationwide, Millennium Trust Company, Entrust Global, Off the Chain Capital, Robo Global, EMQQ, Sheridan Asset Management, and Safe Harbor Equity. Today, this event was brought to you by the sustaining members of FLIA. And, this is part 10 of a series that started on March 26, 2020. And we're going to run this series 10 times in 2021. So I want to thank you all for your attendance and your participation, and thank all of the members of FLIA, for being a part of our group. And with that said, the next presentation is capitalize on the unmet demand for RV and marine storage, and it's hosted by Zenith Storage. So I am going to turn this over to David Baker. David, are you on?
How's that, Michael?
That's better.
Thank you.
So Jeremy, are you on?
I am on.
Okay, perfect. Why don't you guys take it away from here?
Sure. So this is Jeremy Johnson with FLIA, and today I'm gonna be helping David with his presentation. So today we're going to be talking about how to capitalize on the unmet demand for RV and marine storage, better known as specialty storage. David is the managing member and owner and operator of Mercandine Automated Properties, LLC, a portfolio of self-storage facilities which he acquired, redeveloped, and turned around to become a cash flow positive. Mr. Baker is also the managing member of Mercandine Advisors, LLC, providing an ongoing public accelerator for private companies, corporate advisory for micro caps and small cap public companies, and digital exposure for companies seeking to complete offering campaigns and expand their investment community visibility. He has a great pedigree and great experience as a deal sponsor. David, how are you today?
I'm great, Jeremy. Thank you for helping me this morning.
Yes, sir. So I just have a couple questions. Why Las Vegas, and why are you developing specialty storage versus traditional self-storage?
Sure. Let me start with why we're developing specialty storage versus traditional. As Jeremy mentioned, I've been an owner-operator in self-storage for now about 7 years. We own 3 facilities. Well, I guess we own 3. We manage 4 facilities in Las Vegas, Henderson. Both are obviously in Nevada. One in Casa Grande, Arizona, that we manage for a private equity firm. And finally, another one we own in Logan, Utah. And what we're seeing in the U.S. is that self-storage is becoming saturated. And you'll see a lot of the REITs, pension funds, insurance companies are continuing to build more despite the saturation. We think it's a risky way to go. The opportunity we see is in specialty storage. So storage for high value assets, RVs, marine assets, and other things. We think that's where the value is. There's no saturation there, and there's high demand. What we've also seen to drive this demand is not only COVID, but also Fortune 500, Fortune 1000 companies encouraging their employees and members of their teams to work remotely. That's causing enormous demand for recreational vehicles and marine. So those combinations have caused people to want to telecommute, work from the mountains, work from a lake, work from the beach. If you look at a company like Thor Industries that makes RVs, a publicly traded company, stock has skyrocketed over the last year because of this demand. So we think the demand for specialty storage is just beginning, and it's accelerating, and the supply is very, very little. So for example, Las Vegas, Jeremy asked why Las Vegas. Well, in Las Vegas, we only have 2 facilities. We have one facility that's been designed for specialty storage, and it's been sold off in the form of condo garages to buyer tenants. The second one is under construction, and the third is ours. There are no other dedicated enclosed, amenitied, specialty storage facilities in the Las Vegas Valley. We have 2.7 million people here and people coming every day. So there's a high demand for specialty storage. There's very little supply, and Las Vegas continues to grow. It's a logistical hub. It's not only for Amazon that's expanding, but other companies. People are migrating from California and elsewhere, but California is a big driver of population increase here. We've gained professional sports, which is going to start again here in the near future. A lot of outdoor activities, no state income tax, very business friendly, almost an extension of California. So those are the reasons why we're focused on specialty storage and Las Vegas.
Okay, so why don't you tell us about this particular deal?
Sure. We'll flip to the.
Go ahead and share the screen.
Go ahead, Vadim. Great. Okay, so let's get you organized, Vadim. You're ready here. Okay. I'll assume Vadim's ready. So let's flip to the next slide. If Vadim can hear us, there we go. Okay, one more, please, Vadim. Let's go to the next slide, Vadim. Just having a little bit of technical difficulty. Okay, great. So in terms of our investment thesis, and I'll go through the slides very, very quickly because I want to save time for Q&A. So I'll go through the slides quickly, just hit the highlights. So we've been in the business, as I said, for 7 years. So it's not a new business for us. We're building this facility as opposed to buying a distressed facility because that's where the economic opportunity is. We're able to buy the land at a very significant discount, 50% discount to comparable land prices. And we're able to make a lot of progress in a short amount of time and get this project moving forward. It's a recession-resistant business. It definitely tends to be an affluent clientele for specialty storage because, again, it's high-value assets. We're looking for significant capital appreciation when the project is completed, and it'll produce cash flow for a very, very long time once the facility is up and running. And again, as I mentioned, there's only a couple of other facilities focused on specialty storage in the whole Las Vegas Valley. Next slide. Jeremy, are we going to take questions intermittently, or are we going to go through the end of the presentation?
We actually have one now, which is from Angela, and she says, how do you think about the defensibility of specialty storage? Barriers to entry aren't very high given it's easy to build. Okay, interesting question. Well, the barriers to entry are actually several, and some of them are related to any development project. First of all, you have to find a place where there's a location that's a good location. So that's not an easy task. It's sort of like they say in business school with real estate: location, location, location. So it may be easy to build in terms of finding a contractor, et cetera, but the design is critical, finding the location is critical, and as we've just experienced successfully, getting planning approval is quite difficult, especially in a major city like Las Vegas, and it's even more difficult in places like Miami, Los Angeles, et cetera. The other thing is there's got to be a lot of planning and design in terms of amenities and planning out the economics in terms of what you're spending to build versus what you expect to gain in monthly rental income. So it's certainly not plasma physics for sure, but it definitely is something that needs to be planned out in location, getting your project approved, how you're going to monetize the facilities, et cetera. It's also not something that the REITs, pension funds, insurance companies really want to mess with right now because they don't have the knowledge and expertise. And what they want to do is buy the project from people like us. Okay, thank you.
So I hope that answers the question. Thank you, Jeremy. Okay, let's go. The business model slide will be very, very quick. What we're doing is we're purchasing vacant land, we're developing a facility, gaining the capital appreciation, and then high cash flows for the foreseeable future. It's not really a whole lot different than what we've done before, buying a facility in a bad location, poor condition, low occupancy, and turning it around. So we're used to starting with with very little and turning it into something meaningful. Next slide, please. Okay, so this is important, especially I think for prospective investors. So we basically found the property in April, May of last year, went into contract. We then went through the process to get planning approval. We got planning approval by the Las Vegas Board of County Commissioners unanimously on November 18th. They were originally not recommending approval, but we did a lot of politicking. Our land use lawyers did an unbelievable job, and we were able to get everybody to support the project: planning, fire, public works, etc. We got planning approval November 18th. We closed on the land to purchase November 30th of 2020. We have a bank commitment for 85% loan to cost of the project, but we're not going to have that level of leverage. We'll be more like a 65% loan to cost project. I just don't want the leverage. I want the cash flow to be higher. So we do have that letter, but it is in place as I speak now. But we'll take less leverage. We've engaged project architects and engineers and started the permitting process. From now, it's probably about a 7-month process at this point. Then we'll break ground for construction. Any questions, or should I go to the next slide, Jeremy?
You have a question. How big is the land and what is the cost?
The land is 2.33 acres, and the cost of the project, plus or minus, is about $4.3 million.
Also, where is it in Vegas specifically, ballpark area?
It's on Cary Avenue, which is in northern Las Vegas, not to be confused with the city of North Las Vegas. It's in northern Las Vegas. It's about 12 minutes from the Strip, about 12 minutes. So it's not very far, 15 maximum. And it's quite close to where the highway begins to get to Lake Mead. So it's in a very good location for people that want to enjoy recreation near Lake Mead. It's not far from the freeway in case somebody wants to go to the national parks in Utah or go in a different direction. So it's quite a good location.
Another question: what was the interest on the 85% loan?
The interest on the 85% loan is about 2.6%. Don't hold me to that exact number because it floats every day, and that's about a 3% rate on 2/3 of the capital, and the other third, working in conjunction with the bank, is SBA capital, which is about 2.16%.
Okay,
so it's quite low.
Got another 2 questions. So one was, Callie wants you to explain the permitting process. They're very impressed that you were able to get that.
Thank you. Well, I always believe in hiring the best people that are smarter, more competent than I am, and I like to hire experts and people that really have experience doing this. So we hired a fantastic law firm. I don't mind saying who they are. They did an unbelievable job. Brown and Brown. They represent some of the largest developers, hedge funds, et cetera, doing major projects here. They have internal planning people that came from planning. So I used the best people. We were very patient about the process and very strategic about where to give up a concession. The reality is, though, we did get 5 out of the 6 variances we were seeking. So all I can really say is that it was a great team of people. We have an excellent architect, great civil engineering firm, fantastic land use lawyers. Just use the best people here, and didn't seek discounts. We weren't trying to jump over dollars to pick up pennies or squeeze people down. We paid them for the value they brought, and I'd say they brought way more value than they charged us. And hopefully they didn't hear me just say that. But it was an unbelievable team. It is an unbelievable team. Without them, I wouldn't be presenting to you today. So it was really hiring the best people and being patient and strategic about how to do the process.
Awesome. The questions are coming in too. I'm sorry.
Sure. No, go ahead, Jerry, please.
Okay. So Angela says that you mentioned that you got the land at 50% below the replacement cost. Could you clarify this process?
Yeah, it was 50% below the comps. Vadim, can you go to the next slide just so people can look at something new while I answer that? Yeah, we were able to buy the land at a 50% discount to the comparables, And the land was owned by a extremely sophisticated family office. And I speak with them once in a while. I didn't know them before the transaction, and they own a lot of property, a lot throughout the valley. I believe they've owned property here for 40 years. And the only thing I can think of is that they didn't really think of a use for the property. And I think that's a reasonable conclusion, because otherwise they would have kept the land, because they own a ton, both commercial and land. And like I said, they're doing it for 40 years. I will say that when I got very interested, they backed off for a little while, and it took, when they saw my interest level, it took about 6 weeks to get a signed deal. Wonderful people, very, very sophisticated. I just think they didn't have a use for the land. They're not in the storage business. There was height limitations because the Air Force Base is just north of it. And there are a bunch of limitations that would make it difficult for someone trying to do, let's say, a tall commercial building or something like that. But for our use, it was perfect, and it was actually the use that we're using it for is actually overtly written in the code. So we were quite fortunate. So that's how we bought it at a discount, I believe. They just didn't have a use for the land. After that, 5 prospective buyers, when we were in escrow, came in to buy the property at higher values, but we closed on it. Is there another question, Jeremy? Or should
absolutely, absolutely. We have some more questions if you want to take them, or you want to keep going.
Sure, I'll take a few, and then we'll just move on to this amenity slide.
All right. So, what's the median income in the area? How many households nearby?
Median income, I don't have that figure. I don't want to say something I don't know, so I'll have to get back to you about it. I don't know the population figures exactly, but if you look, and I'll show you an aerial map here, you'll see that there's residential all around with some commercial. What's most important for us is car counts. So car counts are 9,000 cars per day, and that was during COVID. It's only increasing now. So cars per day was 9,000. That's generally what we're looking at, just as much or more than the population around. But there is population all around. You'll see in the aerial. So let me just get through some of the slides as quickly as possible, and we'll go through more questions. So you can see in front of you, this is the inside of the facility. It's highly amenitized. And you'll see there's epoxy sealant on the concrete pads. I won't read you each label, but that's really to protect the investment for the owners of the facility, not just make it easier, which it is, for tenants to clean. There's central vacuum. We have good ventilation. We have evaporative cooling, which is analogous to air conditioning, not exactly like air conditioning, but it's extremely, extremely efficient at cooling at a discounted price. We're also putting solar on the roof, and we have electric vehicle charging station in here as well. So there's a lot of amenities, much less expensive to plan it and do it now than to do it later after the fact. Next slide, Vadim. Jeremy, do you want to take another couple questions?
Sure. So let's see. Do you hire an independent management company to lease your facility?
I didn't. That's a great question. I didn't used to. For 6 of the 7 years, I was doing it myself. I had admittedly tried once and didn't have a good experience, but in evaluating things last fall, I decided to try again. I had more knowledge and more experience from the previous time when I tried to do it, and I wasn't happy with the results. So I interviewed 7 national and regional companies. That's the short list. I interviewed them myself and was quite diligent about it, and ended up then, yes, selecting last almost October a national management company. And admittedly, they have done a better job than I did. I thought I was doing a good job or a decent job, but they have done a great job. And they have the staff and the infrastructure to do more than, a small 6, 7 person, 8 person firm can do versus, several tens of people managing 200 properties. So now our model is to develop and then turn over to the national management company, which I'm extremely happy with. But that doesn't mean there's not things for us to do in terms of Mercadine automated property. So they deal with staff issues and repairs and maintenance and other daily operational things, but we still deal with things like financings, refinancings, insurance issues, investor communications. There's still plenty to do, but they handle the daily operations. So yes, we've now outsourced it. Took some time to find the right company, but yes, we do. Next question, Jeremy.
Okay. So what's the management fee and what's the average rent for enclosed boats and RVs?
Well, there's not a lot of this asset class out there, but if you look at the two that exist now here in the Las Vegas area, it's about $700 a month. It can be $750, $775, could be $675. It depends upon the location. Again, there's only two. Depends on the amenities, etc. So there's a variance, but let's say it's $675 to $775 a month. In our facility, we've done in 18 months, and I'm sure prices will be higher then. Everything in Las Vegas keeps going up. Real estate values, etc. Just as an aside, in terms of demand, I believe it was BlackRock bought 49.9% of all MGM's real estate around January 20th of last year, and that was, pre-COVID. They had months and months to close on the deal. They closed on the deal, and demand here is skyrocketing for the reasons I already discussed: logistical hub, low income taxes, outdoor activities, etc. So demand here continues, and I'm sure rents will continue. The other question about management fee: in our model, our management fee is $4,500 a month. This is approximately 49,774 feet of net rentable square feet across 233 acres. So it's in line. Next question.
Okay, is this an accident potential zone, APZ? Was it listed as an APZ?
Not to the best of my knowledge. It never came up during anything with planning, etc. So I'm not familiar with that term, but I've never heard anything like that.
Okay.
For this property.
Okay. John Mahoney wants to know, how do you assess demand for specialty storage differently from traditional storage?
Sure. Let me get to that. Let me just blast through the slides so everybody can at least see what's in the deck, and then we'll get to more. So I know we've only got 7 minutes. So this is the portfolio. These are the 3 facilities that we own. Our numbers 1, 2, and 4. The third column from the left, we're a joint venture partner with a company named Caliber Companies Inc., a fantastic private equity firm in Scottsdale, Arizona. They own hotels, industrial, etc. So we're partners with them on this facility. They're the majority, we're the minority. So that's our joint venture. The other 3 we own the majority of and operate. Next slide, please, Vadim. Not going to spend too much time, but this is our quarterly income performance on our 4 facilities through mid-year of last year. Actually, you can see during COVID, which is letter E, that it went down a few percentage points. Actually, although we haven't updated this yet, our income performance has just climbed and keeps climbing every month. So we've done better than this graph here from mid last year through now. So we just keep climbing. Our rental rates are increasing, our revenues increasing, everything keeps getting better. Next slide, please. This next slide is capital appreciation, and you can see how we performed. You can see when we acquired our facilities and how we performed compared to, CubeSmart, the REIT Index, S&P 500. It's actually, the numbers are actually higher now than in this graph because we just had 2 of our facilities appraised in connection with refinancing. So actually the numbers for us are even better than you can see in this graph. Next slide, please. Okay, someone had asked about just how we ended up buying the property at a discount. Another person on the call had asked about population. So you can see here the land, it's outlined in green. You can see all the residential population around it. Cary Avenue is the main highway you see in your, or I should say road, boulevard, avenue that you see in your mid view, and you can see in the background the strip. So we're not far from it. I already explained how we were able to buy the property at a discount, and it's zoned exactly for this. We've got the car count, and again, it's 35 minutes from Lake Mead, so it's in a great place. Next slide, please. I know I only have 5 minutes. Okay, this is just an overview, topographical rendering of the facility. You can see solar on the top, and to the north in the background is actually the Air Force Base, which you may not be able to see here, but that's where it is. Next slide, please. Okay, this is actually the site plan that we filed with the County of Las Vegas, which was approved, and it just shows you the layout. I'm happy to get the deck out, Jeremy or myself, to get the deck out to anybody who wants it. Next slide, please. Okay, here's just showing you where we are relative to the lake. Next slide, please. This is a timeline. I'm not going to go through it with you, but I'll just say we expect to break ground in October of 2021. So this year in October, maybe September, but let's be more conservative, say October. We'll break ground and to be leasing up in June or July of 2022. So again, once the permit process is done in August, September, then we'll break ground. Next slide, please. Returns, I'm not going to go through them with you, but they're high, and they, as you'd expect, go lower the longer the duration, because you get your biggest bump in valuation and appreciation when you go from land to a completed facility that's producing cash flow. Next slide. Okay, Jeremy, why don't we take questions?
Okay, so the most important question is, how do people invest, and how much are you trying to raise?
We're looking to raise another $1.4 million, $1.5 million. We've raised just under $500K so far. We have not spent a lot of time marketing this transaction. We've been quite busy with the process itself, and now we're focused on capital raising for it. And what was the other part of the question, Jeremy? I'm sorry.
And how do they invest? Yes.
Sure. So if they want to send me an email or give me a call, my number is 415-297-4749. Jeremy, maybe you can get my contact information out to anybody who
I'll put it in the chat.
If they want to send me an email.
Yes.
Great. Then I'll send out the documents. Happy to do so. Happy to give you my time and give you all details.
And I guess, can you address that question about what makes this the demand for specialty storage different than traditional? And I'll pass all the other questions on to you.
Sure. I mean, what makes it difficult is, different is that with regular self-storage, you're storing things that will physically fit in a relatively small space, and it's not customized for the asset. This is storage of high value assets, boats, RVs, trucks, things that you really want to protect, that you want amenities for, that you want to be able to store and have peace of mind. The thing that customers care about most, the tenants care about most, is security. That's why we have 8-foot high walls that were approved by the city for our facility. We have a lot of technology. We have no keypad, so it can't be hacked. We have transponders. So there's a lot of technology, a lot of physical security, and that is quite distinct. And then, of course, the unit is, thanks, Vadim. Vadim, why don't you go back to the offering summary? That's why we've really designed the whole thing so that it really fits these kind of sort of Class A motor coaches, marine, et cetera. The physical units are 17 feet wide, center on center, 18 feet high, and approximately, depending on the unit, 59 feet deep. I think we have maybe a minute or more for questions.
All right. Let's see. And what's your smallest investment ticket size?
I believe the smallest ticket size per the documents is $21,000.
All right. Well, thank you so much. I'll place your link on the to your video that you did before on the flyer site in the chat, and I can get your contact info on anybody else. I'll forward these questions to you.
Great, Jeremy. Thank you very much for having me. I appreciate it. Thank you, Michael. Thanks very much.
Thank you. Thank you very much, David. I appreciate you. I appreciate Zenith for being involved in FLYA and being sustaining members of FLYA. We welcome you back to do more.
Thank you, Michael.
On the subject. It's a hot topic right now. And those of you that are looking to get exposure to this asset class, please reach out directly to David. His contact information is here. We'll be following up and sharing more information after this presentation.